and welcome to the brand new Startup Central. I'm Nayantara Rai. This is your daily stop on startups, entrepreneurs, technology, disruption, innovation, anything that has to do with the new economy. Before we go any further, just a quick alert. Stay in touch with us, folks. Tell us what you want to see on the show, what you never want to see on the show. Our email address on top of your screens, startupcentral@etnow.tv. You can also write to me directly. My Twitter handle is @Nayantara Rai. Now, a week ago, we saw a mega deal being announced where Ebix bought Yatra for over 2,300 crore rupees. There was a premium to the share price as well. And today, we're going to touch base with the deal maker. We're going to be joined by Robin Raina, the Ebix chairman. There he is on your screens, ladies and gentlemen. Robin, congratulations on that mega deal. I must say, you're a really cool office. We can make out that you really like your motorcycle. Literally, you can ride out when you want to. But jokes aside, congratulations, a mega deal, 2,300 crore rupees, a premium that you're paying for Yatra as well when the deal was being announced. Why did you decide to buy Yatra, and how did you convince Yatra to sell out?
I think, first of all, thank you. I think we basically decided to buy Yatra. The simple goal was to emerge as a end-to-end travel leader in the country. Today, with the purchase of Yatra, if this merger goes through, we would become an undisputed number one in the B2B and the corporate segment. Between Yatra and our travel portfolio that we already have, we would be conducting around $4 billion of GMV. So we basically approached Yatra almost a year back and spoke to them and made a public offer to them, and that's what has led to this deal.
And before this deal and before with what you get with Yatra, you've been primarily in the Forex business, right?
Not really. We've actually been building end-to-end financial exchanges. We do lots of different things. We are leaders in India for foreign exchange. We conduct around $5 billion of GMV on our forex exchanges. We also do inward remittance. We are market leaders, have 70% of the market share. Cash-to-cash inward remittances from abroad. Conduct around $6.5 billion of GMV there. Even before Yatra, in travel, we own two brands, Mercury and Via. And we conduct around $2.5 billion of GMV on our travel portfolio itself. But we also do a lot of lending technology, wealth management technology. We have cab companies, we have e-learning ventures, we have a few startups that we own. So we do a variety of things that end up basically what it leads to is we conduct around $15 billion of GMV in India on financial and insurance exchanges. We also have a joint venture with Bombay Stock Exchange for insurance, just trying to sell insurance all across the country.
Okay, so that's a whole...
So we do a lot of different things.
Yeah, you do a whole lot of different things. So Robin, the show is about entrepreneurship as well. So tell us, is this a first generation enterprise? Tell us a bit about Ebix.
Well, I joined Ebix in 1999. Ebix basically is an American company. I was the first Indian to join them. Now I hold a US passport, though I always like to say that I still hold an Indian heart, so that's my Indian passport. So having said that, I took over as CEO in '99. At that time, the company had never made money in 23 years. It was a relatively small company, lost $19 million in '99 when I took over. Beginning 2000 was the first year of profitability. Since then, Ebix has reported close to 20 years of sequential growth. We've been in the list of Fortune's 100 fastest growing list 5 times in the last decade worldwide. So it's been a continual growth story. We today have customers in 69 countries. We have offices across 5 continents. Having said that, Ebix is the largest insurance exchange in the world. We conduct a few $100 billion of premiums on our platform. So I think that's the background of Ebix. I'm the group chairman based in Atlanta. I'm also the group CEO, but I'm very deeply involved in India as we set up Ebix Cash IPO and create what I believe could be one of India's largest financial MNCs. headquartered in India but spreading all across the world. That's the dream that we're breathing right now.
Okay, so when will we see that dream become a reality? Will you look at a listing in India when you do that? Do you have a timeline in mind? We're of course talking at a time when most companies, debutantes are staying away just given the meltdown and the bears taking firm control of the Wall Street.
Well, yeah, we're planning an IPO sometime in second quarter of 2020. Look, if you have solid fundamentals, I feel that you can go public anytime, right? It's a question of how good are your fundamentals, and the Ebix Cash Indian operations have fantastic fundamentals. We run a company with 30% plus in operating margins. We're one of the highest organic growth stories right now in the financial exchange world in India. So we feel we have all the makings of a good IPO. So yeah, so second quarter of 2020 is what we plan to.
And how much
when we plan to take our IPO out in India.
Strong fundamentals, and then the timing doesn't matter. So Robin, give us a sneak peek. What kind of valuations are you looking at?
Look, I wouldn't give you any guidance on what valuation we're looking for. At the same time, I think we feel the company is right now headed into a phase where by the end of this year, we're probably going to be running at net revenues of $600 million a year, annualized revenues of $600 million a year with 30% operating margins, which means that we have a making of we believe we have the makings of a very large multi-billion-dollar IPO.
Multi-billion-dollar IPO. I know you in the past, you have said that if you didn't get a $2 billion valuation, you'll be very disappointed.
That is true.
So anything, it has to be above $2 billion. Okay, Robin, if I could now ask you also, year 2000, when you took over at Ebix, there must be something about the year 2000. There was the dot-com bubble, the internet companies, whatever it is we saw. It was also the starting year of Make My Trip. This show is also dedicated to startups and entrepreneurs. It would have been very tough in 2000 when you took over at such a rough time, when credit, for example, had been difficult. People very soon thereafter started turning away from the capital markets as well. Share some of the learnings, the new gen that's watching you, the entrepreneurs, the startups that are watching you. How did you do it? How did you do the turnaround?
Look, I came in when the stock was at 31 cents. Presently it's trading at 45 or 46, which incidentally is a low for us. I've been here, I've seen shareholder return of more than 26,000% since I came in. I still hold almost 95% of the stock that I'm the largest shareholder, and I still hold all my stock. And part of the rationale I have is, I always say business is all about simplicity, right? When I took over, that was the roughest phase. The bubble had just, the NASDAQ bubble had burst. All the tech bubble had burst and so on, and the dot-com things were happening. So, however, I always believed that you could succeed simply because of few things that I always like to adhere to. One, I believe business is as simple as you make it out to be. I think if your financial vision, you have to kind of simplify your financial vision. Your financial vision has to be that your selling price has to be a lot more than the cost price. If you can simplify your life and just ensure that your selling price is a lot more, you're going to do well. That's the first basic that I tell every entrepreneur, that go to your basics. The second is, I have always invested in bringing paradigm shifts in the market. So in 99, 2000, I remember a board meeting where I told my board that Atlanta has the busiest airport in the world, and Atlanta also has the biggest airline in the world, Delta Airlines. And I basically said, look, I'm based in Atlanta. As a board, you need to make a vision statement. A decade from now, do you want Ebix to be Delta Airlines, or do you want Ebix to be like Atlanta Hartsfield Airport? And what I meant by that was, I told them, you can choose your flight. You don't choose your airport in Atlanta. And if we can somehow become an infrastructure-based service, then everybody will use us. You won't be competing with others. So that's the business model that I have stuck to. That is to create non-aligned services and provide them in a fashion with in a fashion which is seamless. What I mean by that is convergence is key. And I always tell entrepreneurs, whatever you do, build convergence in your business. Connect B2C with B2B, connect any islands that exist in your insurance and move the data seamlessly. And that will help you overtake regulatory issues, any headwinds that are out there, because your fundamentals will be strong. If your fundamentals are strong, you will survive.
Okay, so that's advice that's coming in from Robin Raina, who turned the company around right after the dot-com bubble, and look where he is sitting now, acquiring Yatra for about $340 million. Robin, give us some insights. What's your plan as far as Yatra goes? This is coming close after the acquisition of Mercury as well as Via.
Well, yeah, meaning Yatra, I think we're going to integrate the brands. We will retain the Yatra brand. We might change the name to Ebix Yatra. So what will happen is the Mercury will become a luxury brand, luxury and events brand in the travel markets. Via will remain our B2B brand, and then Yatra will become our corporate and consumer brand. So having said that, our goal is rather simple with Yatra. We want to deliver 30% or more in operating margin. So we have a very detailed plan that we have arrived at working with the Yatra management that we intend implementing ASAP. So we believe that the transaction can be accretive to Ebix shareholders to the tune of 40 to 75 cents in non-GAAP EPS.
You know, there will obviously be a lot of redundancies that could be created. You know, I'm sure a lot of employees have reached out to you on this one. How are you going to take care of that?
Well, I think redundancy is part of, I call it synergies. So I don't think there is any two ways about it. There will be some changes. I think I could just tell you that at the leadership level, we intend absolutely retaining the leadership team in Yatra. We think highly of them. At the same time, there will be other redundancies. That's the meaning of when you put two organizations together, you will try to centralize. We tend to centralize services. And so we're going to see a little bit of synergies here and there. But I think that's a given. At the same time, our track record is, if you look at my track record in India itself, I've done this, I've made a lot of acquisitions in the last 2 years itself. And if you look at any of those acquisitions and look at the net result of it, we have grown and we have employed a lot more people than the people we've inherited. So I think it's part of the journey. When you acquire a company, you will have to reduce. This is a subtraction and addition game. First you subtract, you make the company lean, efficient, and then you grow from there. And as you grow your business organically, you continue to add more employees.
You've also done this acquisition at a time when there is a slowdown in the economy. Usually when that happens, travel is the first thing which is crossed off, right, from the spending list. FMCG has shown it's not recession-proof. Is that a concern at all, that as India heads into this slowdown, travel might be affected?
Well, look, first of all, this slowdown is a relative term. This is a term that I've learned in India, that people tend to relatively use this. India is still growing faster than most of the remaining world, right? Whatever we call a slowdown, especially travel markets are actually growing phenomenally. If you look at what the travel markets are forecasted at, they're growing pretty well. Now, there have been a few mishaps in the travel industry in India, which I wouldn't blame the travel markets for it. I blame the entrepreneurs for it. You know, if you get too caught up in strategic thinking, and if you borrow more than you can handle, and you don't have a good profitability model, then at some point you're going to run into a shortfall. And that's what has happened with a lot of entrepreneurs. So sometimes entrepreneurs tend to pass the blame the government, blame the regulatory regime, blame the slowdown in the markets. I'm not buying, frankly, I'm one of those who's not buying any of that. I believe it's got more to do with, inefficiencies in those organizations than to do anything with the slowdown or anything to do with regulations or anything to do with overall government issues.
Okay, so that's good to know that you're still bullish as ever. India is still being the fastest growing economy on this planet. And Robin, at the start of this interview, you also said that you like to make investments in startups. The show is called Startup Central. Tell me what kind of startups you have in your portfolio. What is your checklist for making these investments?
Well, I think first of all, we recently invested in 2 startups towards the end of last year. So we bought a cab company called AHA Cabs that's basically focused on intercity travel. It's like any other cab company, but what it does is it does everything that Ola or Uber does, except that it focuses on intercity travel, and it focuses on trying to give you a one-way fare. So most of the time when you book travel, let's say you want to go from Delhi to Jaipur, most people will charge you 6,000 rupees and AHA might charge you 3,000 rupees because they're charging you one way. So they perfected this model of getting you those cabs who prefer going one way because they're trying to return home or something like that. So that's one startup we invested in. The other startup we invested in is Rotier, which is basically like the Uber of trucking. So we created a logistics exchange to connect the providers like a Coke or a Mother Dairy or a Jio or a Reliance, virtually building a logistics, helping companies like them to have a logistics exchange so that they could work with small and large truckers. So when we are looking at these startups, I think one of the key things in a startup is, besides the normal stuff of good technology and common sense and so on, I think what we focus on is what do the founders bring to the table? What's the level of passion they bring? How commonsensical is that? And then we try to put a system around it, and we try to inculcate discipline in these founders because we don't want them to go crazy. So we centralize a lot of their functions, and then we try to back them, and we focus them back on marketing and on product creation, and we try to tell them stay away from anything to do with things that you shouldn't be worried about.
So you'll be a very involved investor.
We are a very involved investor, and that has worked very well for us. Meaning,
so you'll be a very involved investor.
We are. We like to bring in technology, knowledge, centralization. And I'll give you a simple example. When we invested in Rotier, they were doing around $50,000 of revenue a year. And today, this was in October last year. Today, on a monthly basis, they're doing in excess of $1 million of revenue right now. So it's, once you bring discipline and empower people, you bring the upside of what an investor should bring in terms of empowerment, but you bring discipline. So to me, discipline is key.
Discipline is key for Robin Raina. So tell me something, you told us what you look for. What is something that you'll never go near? It's always good to know the don'ts as well.
Well, I am not into losing money. So I am never into trying to buy businesses that are growing for the sake of growth. I'm not interested in organic growth. Sometimes investors go crazy over organic growth. And I see a lot of examples that present in India, companies that are losing money, 40% to 50% of their revenue, and they have big multi-billion-dollar valuations. I'm not one of those who, I'm not a fan of such companies. I believe that I like to stay away from efforts wherein, there's not a clear goal to make money. So to me, that is a clear no-no from my perspective. The other one is, I like to invest in recurring businesses. I am not into digging a well every day to take my water out. I like to build recurring businesses. So if there is a one-off business where you see, 1 year is going to be a great year and next year may or may not be a good year because you're too focused on a B2C world, then that's not a good business for us. I like to build businesses wherein there is a high level of comfort that the revenue, that 80% plus of the revenue will automatically happen. So if the answer is not that recurring, then I stay away from it.
Robin Raina, before I let you go, I'm going to ask this question and everybody who's watching right now. So if they want to pitch to the Ebix chairman, they want to make a pitch to you for an investment, a very active investor, I might add, and of course they have to be disciplined too, how should they pitch to you? How should they reach out to you?
Well, look, I'm not looking for too many pitches right now. I am absolutely flooded with the amount of pitches that get made to me. So I think at the same time, yeah, meaning I think I'm relatively easy to reach. People know how to reach me. I'm a public figure, so if there's a great idea, they can just email it to me, and I'd be happy to look at it.
Robin Raina, with that, I'd like to thank you for joining us here on ET Now, Startup Central. All the very best.
Thank you very much.
And with that, we're going to take a short commercial break, but stay tuned. You're watching Startup Central. We've got a lot lined up after this break. We'll be back in less than 2 minutes. Welcome back. You're watching Startup Central with me, Nayantara Rai in New Delhi. The show dedicated to technology, innovation, disruption, of course, startups and entrepreneurship, anything to do with the new economy, which the government often likes to call New India. While we're talking about India, yesterday was a very proud day for all Indians after India successfully launched its second space mission to the moon, Chandrayaan-2, which in Sanskrit means the moon vehicle. The 142 feet tall spacecraft launch is being acclaimed globally, critically acclaimed globally. It's the first time a spacecraft has been developed indigenously by the Indian Space Research Organization and set foot on the lunar soil. This feat has been achieved by only 3 other countries besides India: US, China, and Russia. Here are a few highlights from yesterday's launch.
5, 4, 3, 2, 1, 0.
समय आप अपने स्क्रीन पे देख रहे हैं लो एस 200 रॉकेट
Press 5 seconds.
दोनों का प्रिपेयर हो गया है और से 640 से
It's the beginning of a historical journey of India towards moon.
There you go. That was the proud moment at 2:43 p.m. when we saw the Chandrayaan-2 being successfully launched. Now, the space mission is very important for this government. This space mission that you saw to the moon, the second such after an 11-year-long gap, is going to be followed by a mission next year to the sun. After that, India is committed to launching a mission to Venus. It's not just that, a mission is also being planned with 3 Gaganauts, which are going to be 1 woman. It's going to cost a lot of money. It's going to be in space. They're just some of the highlights of the space mission program that we have planned out over the next couple of years. What is this going to mean for the various startups that are in this space? That's what we're going to be discussing. No longer do we only talk about sovereigns and space. It's the disruption that we've seen, for example, with Richard Branson and his ambitions. Not to be left behind is Elon Musk, who talks about it. Jeff Bezos of Amazon has a space mission too. So is India lagging behind? Yesterday's mission, incidentally, coincided with the 25th year anniversary of the first time we saw astronauts on moon. I'm going to be discussing this and more with Sanjay Nikanti, the founder of Dhruva Space, who's joining in from Bengaluru. Thanks, Sanjay, for joining us here on Startup Central. So, I want to take off from this very point. Earlier, it was governments, it was sovereigns that really decided space missions. You have seen a departure of that, if I were to talk about Richard Branson, Jeff Bezos, Elon Musk. But this is really the creme de la creme when we talk about corporates. What are people like you planning when it comes to this particular universe?
As you rightly pointed out, right, India has sent, this is the second mission to moon that ISRO has planned. And ISRO has done this incredibly many times, not just Chandrayaan, but with Mangalyaan and its workhorse, which is the Polar Satellite Launch Vehicle. But if you see, there are not many companies in India that have leveraged this potential to build solutions for the world. We at Dhruva, what we are trying to do is we are trying to work with these smaller industries, like about 200 small industries that have been supporting the Indian space program for the last 30 years. We are trying to work with such players and build smaller size satellites so that we could enable a lot of countries to have their first space mission. If you look at it today, there are 100 plus countries in the world that do not have a space program. And with the proliferation of something called as small satellites, today even a smaller size company could own a satellite, because we are talking about satellites that are the size of a desktop printer and not like the size of a large SUV. Does that give you a good perspective, Nayantara?
Obviously, pardon my bad pun, the opportunities are perhaps even bigger than the solar system when we talk about founders and we talk about entrepreneurship. And I apologize for that really bad pun, but that's exactly what it is. So as we look to explore more in the space, etc., what I want to understand and get a sense from you is that regulations, that must be quite tough, shouldn't it be? And this is also, you're talking about territories in space, but to a couple of nautical miles, it's governed by sovereigns. So how does it work?
Right, that's a good point. So if you look at every nation that wants to launch a satellite, usually it needs to be a signatory of the United Nations Treaty on Outer Space Affairs, which also says that outer space should only be used for peaceful uses. So once a country becomes a signatory of the United Nations Outer Space Treaty, then it then the regulations fall into the gambit of the country itself. So you need permissions from the nodal space agency to own a space asset. One, and you also need permissions from the telecommunication authority that gives you licenses to operate these satellites. In India, ISRO has been very supportive in the sense they have been trying to formulate a new regulation that would help startups to own satellites and operate them. But today, the policy is not very clear on how startups can operate satellites. But ISRO is very supportive of startups that want to build satellites or build rockets.
About Dhruva, for example, you're talking about how ISRO has certainly become more helpful, encourages entrepreneurs and founders and startups. But when I went on your website, what I did see is that you, for example, worked very closely with a space mission in Berlin. Any particular reason for that?
Early on when we were, so we started the company in 2012, and initially when we wanted to scale the business, we were trying to look at investors who would, potentially be interested in investing in the space sector. But what we found in late 2013 and 2014 was that not many investors were willing to invest in this sector because it could be a high risk, or the regulatory related details were not very clear. So we started looking at working with strategic partners who would find value of manufacturing, let's say, satellites in India. So we struck a deal with Berlin Space Technologies to jointly manufacture satellites in India. That was way back in 2015.
I also want to ask you that, while the opportunities are immense, it is, of course, regulated, as we were talking about, however easier it's becoming. We've talked about some of the big guns in the world that are looking to make a mark in this entire space program. But having said that, when people like you go out for raising funds, is it tough? Is it difficult? Do investors understand it? Because, it's about stuff that you really read about in comics or you watch in the movies, right?
Nayantara, so earlier, like in the journey when we started in 2012 up to 2015, it was kind of extremely difficult. But lately, we've seen that a lot of investors are warming up to the idea of investing in the space sector, precisely, because probably, Elon Musk wants to launch a fleet of satellites. There are reusable rockets happening around the world, so on and so forth. What we see today is definitely a lot of institutional investors as well are closely studying the space sector, and they're warming up to support entrepreneurs who are trying to build technology based in India and launch them or serve solutions anywhere in the world using these small satellites or rockets.
About Dhruva's experience, tell me, what exactly are you folks up to at Dhruva? What are your ambitions? How successful have you been?
So, what we've realized in this long journey is sometimes it could be extremely difficult to make early revenues in the space business. So, today we have a sensor division that stands as a backbone for generating revenues so that we don't depend exclusively on space based solutions. Today, we are trying to work with ISRO on some particular technology. This is still in early stages of discussion. We are hopeful that things would mature in the next couple of months. With respect to our roadmap, we are like a full stack space engineering solutions company. So if there's a customer who needs a satellite, we are here. We want to build satellites for customers. Over a period of time, based on how the industry moves, we want to transition towards owning a fleet of satellites going around the Earth that would power next generation of imaging solutions or communication solutions. But we are talking about some things probably around 2023. But today we are sticking to building satellites in India for customers outside of India.
You say are your competitors? Is this a space that is becoming more popular?
The space is definitely getting interesting. There are a lot of new startups that are coming into this arena. What I see is the market potential is quite huge. So I think there's enough room for a lot of players to coexist. And hey, it's been 40 plus years of the Indian space program, and we don't have a private space company that every Indian is proud of. I mean, people talk about Lockheed Martin, people talk about SpaceX. We want to be Dhruva for the world.
Dhruva for the world. On that note, Sanjay, I'm going to thank you for joining us here on Startup Central. Here's wishing you the very best. Look forward to many more interviews. I know we took a leave, or should I say, the opportunity of Chandrayaan to get you here. But keep coming back to Startup Central. Keep telling us. Next time we want to have a conversation with you on what else the government needs to do, what the ISRO needs to do to get more companies to go for missions to space. With that, folks, we're going to take a short commercial break. You're watching Startup Central. Remember, stay in touch with us. Tell us what you want to see on the show. Tell us what you never want to see on the show. The email address coming up on the top of your screens, startupcentral@etnow.tv. You can also stay in touch with me via Twitter. Pitch to us. You never know. Maybe you'll make it to the show. We'll be back after this break.